The National Social Security Fund has announced that contributors are set to earn 10% of their savings this year. NSSF Managing Director Partrick Ayota revealed this while presenting its performance report for the year ending 30th June 2024. From the report, it was revealed that the need for savers to withdraw their benefits dropped by 3,865 applications, which reduced the amount of money paid out within the same period.
So if you look at our performance, one of the things that I think we really want to, many of you have been following us, and I know Paul has been doing this. In 2015, we set up what we call a 20-year strategic plan. At that time, we were 5.5 trillion shillings in assets. Our goal and our plan was to hit 20 trillion by June 2025. We hit that number in January 2024, 18 months ahead of schedule. So by the end of June 2024, the fund has grown to 22.13 trillion shillings. So actually we grew by about 2 trillion shillings between January and June, which is incredible. And as we'll share with you later what that means for us as a fund.
While inflation has remained below the central bank target rate of 5%, NSSF savers will be hoping that the fund returns a higher refund than the unit trust and treasury bill investment, which hover below just 12%. Mr. Ayota announced that the fund's size had grown by 3 trillion to 22.13%. Revenue also increased by 15% over the 12 months.
If you look at our contributions, and this is a good number to actually tell, because if you follow the money, it tells a story. The last 5 years, 1.27 in 2019, 2021 was 1.37, 2022, 1.49, 2023, 1.72, 2024, 1.93 trillion. It has been increasing, and that's what tells us that more and more people are entrusting the fund with their savings, and that's the story of that contribution. So last year, our contribution grew by 12.2%, which bodes well for that.
The growth in revenue was at the back of the economic environment, a recovery in the equities market, and an increase in member contributions, as Mr. Gerard Kasato, the Deputy Managing Director, states.
Now, part of that was driven by the recovery in the equity markets. When you look at the return that we made on the equity side, we made over 20% year on year. That is when you compare the movements of the prices and the dividends we got. To give context in terms of the dividends, year on year, our dividends grew by 21% from 145 billion last year to 175 billion. That one was on account of the two big investments we made in the year. We made a big investment in MTN and another one in Airtel.
The cost-to-income ratio saw a slight rise from 8.66% in the financial year 2022-2023 by 8.77% in the financial year 2023-2024. Although cost management resulted in a reduction of the cost of administration from 1.02% to 1.00% of the total assets. The compliance rate remained steady at 57% during the financial year 2023-2024. Serena Naguja, NSTV.